How we doing out there, guys? Good morning. Thank you for being here. Very excited to talk to the panel here today. Ben, if you wanted to go ahead and just introduce yourself and talk a little bit about Flourish and maybe your latest announcement that you just had too, would be good to throw in.
It's hard to hear you over the noise. Of the noise of the crowd.
Yeah, please keep it down out there.
Absolutely
Calm
going
down.
wild. So.
Relax.
Thanks, guys.
No
The
pushing.
concert's
No
over.
pushing. If someone falls, you pick them up. Okay, that's just remember.
Awesome. My name is Ben Cruikshank. I am president of Flourish. Our flagship product, Flourish Cash, is a held-away cash solution for advisors. So we're really focusing on helping advisors help their clients with the money that's otherwise sitting in checking and savings accounts. And I think we'll get into that a little bit more in a bit, but to shorthand it, a lot of advisors have historically ignored the cash that sits away from them, ignored the cash that sits in checking and savings. If it doesn't exist at the custodian, it might not exist at all from their mindset. And so really we set out to change that with a savings solution that is deeply integrated with the way that advisors do business. Today, clients earn a competitive rate of 5%. We offer millions of dollars of FDIC coverage through a network of underlying program banks, and just generally offer clients a really easy-to-use savings account solution. The thing that really makes it special and differentiates is how closely we're integrated with the way that advisors do business today. So advisors brand the solution with their logo, have an advisor portal where they can access their client information, view balances, statements, tax documents, things like that. Make it really easy to set up standing instructions with your custodian, direct integrations with platforms like Envestnet and Orion, eMoney, Redtail, and others, and just generally work to find ways to integrate held-away cash, this thing that is distinctly not part of the custodial platform, not part of your AUM. Really work to bring that into the advisor's orbit so that they can help clients earn more, gain visibility of what is held away, which can ultimately open up conversations about bringing some of that into the portfolio, and really deliver value to both clients and prospects. So very honored to work with 650 RIAs, including wonderful firms like Dakota and Stearns, and ultimately helping advisors deliver more value to their clients with something that is formerly really not in the conversation.
Great, and I don't know if you guys want to introduce yourselves as well and just talk a little bit about what your journey with this has been and your history with it and how you started using it, basically.
So my name is Lindsay Brock. I work with Stearns Financial Group in RA out of North Carolina. We're in Greensboro and Chapel Hill. And for years, obviously, we wanted to include the conversation around cash with our clients because we just want to make sure that they're feeling secure with day-to-day checking, savings. But there have been clients historically who sell a business or sell a home and they have a large amount of cash that they needed to put somewhere. They don't want to put it in their portfolio, dump it into the market day one. Maybe we're dollar cost averaging. And so we found that we had a need for a large amount of cash that could be FDIC insured and earn a little bit of yield, something, but maybe the client didn't feel comfortable sending it to our custodian, to Schwab, to hold in a money market fund where we had to place the buys and the sells. So that's how we really started using Flourish Cash as really a solution that we could work with. And I just feel like it's behaviorally such a benefit for us and the client. So I feel like we've had a really good experience so far. Now we're using it really for more than just the large cash holders. Also really young clients who are saving up to build a house or buy a house. And really for any clients that are holding on to cash for any reason, retirees who want to hold a cash buffer. And so it really just opens up that conversation a lot more.
So I'm Brett Orvieto, Dakota Wealth Management. I'm from Fort Lauderdale, Florida. So similar, beach-like environment. Sun is setting on a different side of the where I'm standing, so it's been a little weird this week. But happy to be here. Dakota Wealth Management. We're located in Palm Beach Gardens, Florida, approaching $4 billion in AUM, and we're in 10 states across the country. So pretty diversified firm. So with Flourish, I've been working with them actually for pretty much as long as they've been in existence, a pretty long relationship. But this is really the most exciting time to kind of be talking about it, certainly with what's happened with interest rates. So cash for a long time was just something that clients just left at Wells Fargo or Bank of America or their bank. It wasn't earning any money. They just forgot about it. And then you started to kind of figure out last year as rates started to rise that people didn't really have a plan. They just were used to making no money on it. It's fine. It works. And then it was this pretty interesting trajectory as the rates have kind of gone up, watching client behavior. They start to figure out we can actually earn money on this. So Flourish has been a great solution for that. And if you're not talking to your clients about cash right now, you'll probably be surprised by how much they have people, rainy day funds is, kind of a term that gets thrown around, and depending on how old the person is, some shocking numbers of what they think is a rainy day fund. So we have a pretty fun experiment where I try to ask them for a scenario that would cause them to use this amount of money in one day, and there's never an answer for it. So it's like hundreds of thousands of dollars, like in 24 hours that they somehow need. Flourish, you can get the money literally the next day anyway. So you kind of diffuse all those arguments. But to put it in dollar terms, what they're actually making has been a great experience this year. 5% is a lot of money, literally on any amount of money. And when you talk to a client, it's a compliance thing. You can't guarantee anything in the industry, but the best thing I can do with any client is just move their money from Wells Fargo or Bank of America. Sorry to pick on them if anyone out there, but any big bank like that, and move it to Flourish. I just have made them a lot of money just from one phone call. And obviously, as we know in the market, that's not necessarily the case. Sometimes it's good, sometimes it's bad. But that's one way. By talking to me, I've made that client money, and I think that's been a great conversation to have this year.
Yeah, Rob, if I could expand on something Brett said, there are a number of surveys out there that show high net worth investors have about 10 to 20% of their wealth in cash. So $2 million household, $200,000 to $400,000 in cash. We have a slide on that in our main presentation. I presented that literally hundreds of times to advisors over the years, and the immediate advisor response is, that might be true for other advisors, not my clients. I manage cash track perfectly. We keep 1 to 2% in the portfolio. Balances are really low. Maybe there's a little bit out there, but we just don't really see balances like that. I know my clients best. And certainly we've got some data to suggest maybe RIAs are a little bit better than the average IBD or wirehouse advisor. But we also have quite a lot of data now, 650 firms, thousands of advisors, tens and tens of thousands of end clients that show, no, your clients really do have that much in cash. Our average household, who's worth, I'll just say, $1 to $2 million, has a Flourish balance of $180,000. So $1 to $2 million household, on average, we see $180,000 sitting in Flourish, often at Wells, or Citi, or Chase, or B of A, often earning nothing. And it's always refreshing to talk to those same firms, 6, 12 months later, who said, not our clients. I've got one guy who's got a lot of cash, so I'll sign up for your solution. Like, there's 1 or 2 people I know who they are. And then you come back and say, your average household balance is 150 or 180 or 200 or whatever it might be. There really is that much cash out there. And to Brett's point, now that $1 to $2 million client is earning an extra $10,000 a year in interest that they weren't earning before. Wink, wink, nod, nod. That same client is paying us $10,000, $15,000 a year in advisory fees. I just made a single phone call, helped you earn $10,000 on your cash. Feels like a pretty good trade. So in some ways, the entire reason for our existence is these very large held away balances. And when I say very large, to the client, that could be $20,000, and they're feeling great on earning more. Or it could be somebody who's more risk averse. My rainy day fund's $300,000. You spend $30,000 a year. What are you talking about? Whatever that might be. But really, the light bulb moment for advisors is realizing, no, your clients really do have quite a lot of cash on average in the bank, and you have a real opportunity to help them earn more.
Right, and I noticed you mentioned this is kind of a newer thing. Some people may not know what it is. What kind of pushback do you guys get from clients when you present this idea? It might be kind of a new concept just in general, and you, I assume, have to explain some of the benefits of just even the concept. So if you could talk a little bit about that.
Well, so one of the big pushbacks that I received early on from primarily older clients was the fact that there's not a brick and mortar location that you can go into, deposit a check, receive cash physically. So that's been a little just of a behavioral conversation that we've had to talk through with our clients. That's less of an issue with our younger clients, our obviously Gen Z, millennials, Gen X. So I think that's been a little bit of it, but that's really just education, right? And it's more on the status of the world. Ally Bank and the other Marcus and other online-only institutions are also doing that. That if they don't find it out with Flourish, they're going to find it out somewhere else. So getting them used to that idea that you don't have to walk in somewhere anymore. You can use your app.
Yeah, so that's definitely a big one at the beginning. Certainly somewhat diffused in my world just by basically saying that I use it for myself, right? So it's a pretty easy sell to say, listen, I use it for myself. My family uses it. We have other clients use it. So as more and more people use it, it becomes part of your practice. You kind of prove out that use case that it's worked. The other pushback initially is basically people not understanding just how much money it is. So that was a pretty interesting journey, like I was mentioning, because the rate, like other banks, has gone up as the Fed has been raising rates. So there would be 2%, nah, that's not a big deal. Okay, 3%, and it's like a couple buttons that these people are pushing, right? It's like 30 minutes of their time. They set it up. It's really so easy. There aren't
30 minutes.
It's like 3. I'm talking about the whole thing. You have to move. Sorry, I apologize, but you said 3. I mean, some of these people to log into their email takes 30 minutes that I'm talking about, but in terms of that, like, you just put it in dollar terms. So that's the thing that I've found, right? So I don't talk about percent. I just basically take the money that they're going to give me and then put that in dollar terms and just basically say how much money that is, right? So if it says, we're going to put in $100,000, you're making $5,000 a year. You divide that monthly and basically just say, hey, listen, we just got you a lot more money on your Social Security or whatever check you're getting. To the point about other clients too, it's not necessarily only people with large amounts of money. So what we've found is we have a large client that does it, and they tell their secretary, or they tell someone in their office, or they tell their kid or grandkid, or these small accounts, and you end up getting a bunch of small accounts, and those people are the most appreciative that you've kind of helped them. They never would have access talking to someone like us, and then that makes kind of everyone around the situation feel good. One of my most successful ones is a secretary of one of my biggest clients who puts money in Flourish every month, basically. It's kind of like the way she saves money. She puts it in, and now, like a couple years later, she's made thousands of dollars on interest, when it's just something that, behaviorally she never would have done before. So there's a lot of great use cases. You kind of are able to diffuse it easier also now because people know that it's a thing. Kind of once it reaches 4 or 5%, enough people are talking about it that, oh yeah, I heard someone else is doing something similar. It's just kind of out there, on CNBC or articles that you can do things, and they need the kind of push from you to kind of get them to actually act. And then one of the benefits that I think Ben mentioned before is that we can see the balance. So as advisors, if your client has something at Ally or Marcus, that's great. They like it there, that's fine. But I don't know what that balance is. So at Flourish, I see what it is. I see when they add money, when they move money, when they do something. So it becomes a trigger point for you. So you see your client has $500,000 and they take $100,000 out. They know that you can see it. You kind of have a conversation with them at the beginning about that, but then you have a reason to call them and kind of ask what's going on. The opposite happens. They add a lot of money. That means they just got a big bonus or something happened. It's a trigger for you to reach out because maybe actually that's an idea we can add money to the brokerage account where, we all make money, as a result of that, right? So that's kind of the way that it interacts with advisors.
One thing that just behaviorally I want to harp on for a second, you mentioned the secretary who's earned thousands of dollars. I love that, at least with Flourish, and I'm sure other cash management, if they're not there yet, they will follow Flourish's lead, is when you log in and you've made dollars, it doesn't show you just the yield that you're receiving on your cash. It tells you in dollar terms how much you have earned this year so far. And that is so helpful. So my clients are so excited to say that they earned however many, $1,000 this year so far. It makes them feel good because it's so passive. They haven't had to shop around for yield. They haven't had to ask me how their portfolio is doing because they can see what their own cash balance is doing, and they can leave the portfolio for its long-term purpose because they see what dollars they're earning in something like Flourish.
Right, and so we've talked about pushback from clients. What about pushback from other advisors?
I am probably one of the biggest users of Flourish in my practice. I think we've always discussed, our advisors at Stearns have always discussed cash with clients because we want to be a lifestyle advisory practice where we're actually talking about what do you want your money to accomplish for you, what goals are you working towards, whether it's accumulation or spending in retirement. But having a solution now where I can provide this idea to them and show them what you have made so far this year, it means it's a lot more simple for me, and I don't have to do the same buying and selling on the money market end. My colleagues, unfortunately, are a little bit reticent, and I hate to call them, don't tell them I said that they were lazy. That's not what I mean. But
good thing we're not being recorded. So.
Yeah, it's not being recorded. This will not get back to them at all. But I think that there is some hesitation about, well, why wouldn't I just use the Schwab money market? Why wouldn't I just use what's already working for me or for my clients? Why can't my client who's at Capital One ask for the performance savings option to get 3.5%? That's close enough to 5, right? And I think that's not good enough. And so I think that's been the pushback is a little bit of just, this is working, so why fix what ain't broke? but I don't think that's a good enough answer in financial planning and in wealth management.
Yeah, so that one that comes up a lot is the custodian cash, right? So why wouldn't you just put it in custodian cash, which is certainly a great solution. We have plenty of money in custodian cash that's kind of within our normal allocations or normal portfolios. But at least I found people treat that different mentally. So when they have money that they want to give me, that's money that's being invested. That's money that we're hopefully doing something with. Cash to them is just cash. It's just like, that's my, like I said, rainy day, or that's for my house, or that's for, I have a big tax payment coming up in April, or something that they're literally just not going to touch and leave. So I think the people that, my firm is a good example, I'm sure many others, just say, oh yeah, well, we just do that with the money market here. Clients view that money differently. They don't necessarily want to give you that extra cash because it's kind of the investment side, basically. So the other part that's a little bit different is it doesn't tell you how much you're making there. So to Lindsay's point, it's just basically this passive thing, and it slowly goes up, and it's kind of, okay, I noticed it. It's not even clear what you're making necessarily. You have to look. People ask all the time, what is it yielding? And it's like a journey to try to figure out what this specific cash fund is yielding and trying to figure that stuff out. So on Flourish, like you said, you log in, it says, here's the rate, this is what I'm getting, this is how much money I've made, this is how much money I made this month. It's like kind of like hitting you in the face that you're doing well and earning money. So I think that's part is kind of exciting too, right? So behaviorally, it really also drives people to give them more money, right? So when Schwab's money market raises its interest rate, which it does all the time without anybody knowing, no one tells you. You don't get an email from Schwab saying, guess what, great news, it's up 3 bips today. It just happens, basically. Whereas at Flourish, it says, okay, it was at 48, great news, it's going to 490. Great news, Ben mentioned it's going to 5. So the client sees that, they get in their email, and then it's pretty obvious when that happens that they say, oh, that's right, okay, I should put more money in it, right? It's kind of a trigger for them to behaviorally save more. It's just a better mechanism, I think, from a behavioral side, which I found with cash is pretty much the entire ball game in terms of that. The other part is they want to have control over it, so that to kind of combat the custodian one, the same thing. That's the biggest one we see internally. Schwab Fidelity have great rates. Just leave it there. The client then has to call. So they just don't want to in some cases. They call and say, hey, I need 20,000 or I need 30,000. That's a call that they don't have to make in this situation. They just move money in and out on their own. It operates like their own bank account. They don't have to tell me. They don't have to ask me to do something. They don't have to bother me or things like that, right? So it's they're in more control, which I think the end client likes. So
one more bit of pushback too is just I think we see what it takes to open client accounts as RIAs or broker-dealers, where there's all of these compliance hoops to jump through, and opening accounts takes hours and days on the portfolio side. Something like a Flourish or maybe another cash management option, it's so quick and easy that 3 minutes or maybe 5. It's so quick and easy that it doesn't require a lot of effort on the advisor's part. I don't have to fill out extra forms. I don't have to go through compliance because it's not me who's managing that. I just happen to see it, and I can talk to the client about it. So that's some of the pushback is they don't want to go through the extra time, but it's really not a time suck on me for my team.
I think the single most consistent pushback we get from advisors, we've hit on the head, is, but I've got a great money market fund that pays whatever, 5.25, doesn't really matter what the number is. And I think it's hard for advisors to accept that their clients have money away from them, have money sitting in Chase, have money sitting in Wells, have money sitting in B of A. And again, that very natural instinct of, wouldn't I rather have it at the custodian? I always tell advisors, if the money is at the custodian, don't touch it. You don't need to invite that client to Flourish. You're good. The client's earning a good rate. It's under your control. You've won the game. You don't have to change what you're doing. My follow-up question is always, for what percentage of your clients are you managing a significant money market fund, usually an accommodated position? I don't mean the 1% to 2%, but how many of your clients have given you their $25,000 rainy day fund, their $100,000, their $500,000, whatever it might be? There are almost no firms out there that give me an answer more than, I don't know, we do that for a couple of clients. And so you realize the advisor mindset, again, why wouldn't I just use this money market fund? That's great. And then you dig a little, you realize they are doing that for 5% of their clients or 10% of their clients, maybe 15% of their clients. And my next question is, what are you doing for everybody else? And do you really want to be managing a $20,000 money market fund position where they're going to be calling you every month for a little bit of cash? And it's really this psychology, this behavioral side. Clients like to have money away. They like to have money in checking savings. They like to have cash. It feels different. It looks different. It is different. And so again, if you've gotten it at the custodian and it's an account you control and you feel good about that operational burden, by all means, do not change what you're doing. What are you doing for every other client? And if the answer is we're not doing anything, or we made them aware of our money market fund options and they decided not to take us up on it, that is a perfect opportunity to say, well, I can actually now help you on the cash that's sitting in checking and savings. Some of those balances, again, might be $20,000. Sometimes you're going to send an invite and that client's got $250,000 that they didn't really want to tell you about because they like having their own money. And again, that's the psychological barrier for a lot of advisors. I think about my mom here. My mom is worth a few $1 million. My mom has a financial advisor. And my mom will literally refer to the money that her advisor is managing as Robin's money. And my mom keeps a little too much money in cash on the side. I'm like, what are you talking about, Mom? It is all your money. You're $3 million. Like, call Robin if you want to buy a new car. She's like, oh, no, that's Robin's money. I like to have money on the side. And so embrace that. Lean into that as an advisor and recognize, hey, I can now help you earn more on that. And now I can see it. We can open up some conversations that way. I'm not trying to take every one of your dollars. And by having better visibility and by having a value-add solution, having a reason to talk to them about it, you might be surprised at new conversations opening up over the time. We can see from our data, we have sent more money to custodians than we've taken. All of our deposits are coming from banks. Again, all of our deposits are coming from Chase, B of A, Citi, Wells, and we are sending more to custodians than we are taking back. There's a natural back and forth there as a client in retirement takes distributions and advisors send money out, or an accumulator client is sending money in. That's always going to happen. But by and large, accepting the money in Flourish is coming from banks, you're helping your clients earn more on a really non-performing asset. And that's really an opportunity to deliver more value, gain visibility, give better financial planning by seeing what's out there, win new prospects, serve, help your clients with other aspects of their financial lives. There's really quite a lot of wins here if you, for advisors, if you can get back that initial instinct of, no, I see it all and it's all at Schwab.
Yeah, and just to add to that, you can link to bank accounts, right? At, like his point, at custodian. So one of the behavioral things, like I said, this is kind of all a behavioral thing, is, hey, someone gives me $100,000. Let's just take all that money that you're earning every month and just move that to your custodial account. Obviously, that's not a huge deal. It's $5,000. The client doesn't even notice. But behaviorally, now you have them adding money every month to you. You kind of do that at a bigger scale. It's $200,000, $300,000. It becomes real money. But also, you've just set up that link to someone to say, oh, actually, you know what? I got a bunch more money. I'll put it in Flourish. You can take $10,000. You could take $20,000. You kind of set up the expectation that they're going to give you more money. So there's ways you can make it work for you. And then the other one is just basically the cost, right? So the other pushback I didn't mention is, what am I getting out of it, right? Am I getting, we're kind of here, okay, how much am I making with fees, things like that. In this world, I think where, you're at the conference, people are all still kind of charging similar fees to where we were, several years ago. There's more commoditization, there's more options, there's a lot of cheap investment options. This is something I can tell you, hey, I did this for you. I'm not getting paid for it. It's part of my fee to kind of just give you advice in general. And people like that. So it's basically like, this is something that I'm actually doing for you, but it's not immediate, hey, how much money did I make off of it? And so I'm pretty clear up front. I make no money from it. If you do it, you should. That's great. I want you to do it. But if you don't, that's fine too, right? So that, I think, is different than a lot of calls that they've gotten from other advisors in the past, whether they're being sold annuities or insurance or things like that, where it's a very clear benefit to the advisor. For me, it's just more like the buy-in from the relationship, that I'm doing something that I don't have to do. It doesn't directly benefit me from a money perspective, but it helps kind of buy in that relationship, basically.
So this is not a Flourish infomercial, so we are going to talk about some others, but how does this compare to other types of solutions that are in the same realm? And I'm sure clients bring this up when you talk to them about this. So how does Flourish differ from some of the others?
Well, I can tell you personally, because I used Capital One, online, and I loved that for years. I had to call them and jump through hoops to be able to upgrade to their performance savings just to get 3% a couple of years ago, and I was pissed. That sucks. So you have to jump through hoops to get to other levels, whereas Flourish adjusts along the way, and they send you an email when they're raising rates. So it's really transparent. So rather than kind of pull people's teeth out to try and get a higher rate when in a rising rate environment. It just happens. That's a huge benefit.
Yeah, most banks right now, and I tell my client to do this because it's almost amusing, but the most banks work like cable companies have for kind of the past like 5 to 10 years, right? So it's like we have this like super low rate, but if you really call us and ask, suddenly we put you on hold, and then another guy got us on hold, and all of a sudden, great news, you just went from 0 to 3. And it's like a stupid game that they're kind of playing. They just hope you don't call, then all of a sudden they get to 3. And I'll have clients call me and say, great news, I won, like I got it. It's like, okay, congrats. But like, it's never close to kind of what the actual market rate is. But it is almost like an eye-opening experience for them because they realize that they've been kind of getting, I don't want to say ripped off, but they've been underpaid on those accounts for a long time, right? So that money is there to be made. And the part that I think is worth noting, because we're kind of mentioning, is the FDIC side of it has become really, really important, right? So no one was asking about FDIC before this year. It was people had a ton of money at one bank. It's not a big concern. All of a sudden now, for those really high net worth clients or charities or businesses or people with a lot of money, there's a lot of solutions out there now for this. But it is worth a conversation to have. Hey, you shouldn't have all your money necessarily in one bank if you have a lot of money. So certainly the beginning of this year was kind of like a good use case for it. And my FDIC questions went from 0 to 100 pretty fast on that. So it's nice to kind of have something that we can talk about with that.
I'll say there are almost no advisor-centric solutions for cash. There are tons of solutions out there in the broader market for cash. So sometimes I think our competitive set is like 0 to 1 companies. Sometimes I think it's every bank, broker-dealer, robo, you name it in the world. I'd actually highlight, if any of you saw Sarah Levy's remarks on Sunday, CEO of Betterment. And she said basically, cash is our engine of growth right now. We are using cash to steal clients from other advisors and affluent individuals in general, building relationships. They've got a great cash management product that they launched back in 2019. So that's an example. That is a solution that is out there. The question is, if you're an independent RIA, what's your solution? You're not gonna. I don't think you're gonna use the Betterment Cash Reserve solution for your clients for some obvious reasons. So I think it's important to step back, look at the landscape. Robo-advisors are recognizing that there is an opportunity here, and sometime in the last couple of years, they have all launched some sort of cash management solution. Wirehouses have known this to their core for years, decades. If you are a wirehouse advisor, I manage the portfolio. Also, I've got checking, I've got saving solutions, I've got mortgages. That's one of the huge benefits you get as a wirehouse advisor, is knowing you've got that full suite built on top of a banking stack. Robinhood, example, has a cash management, Robinhood Gold or something like that. You pay a subscription fee, you earn a really competitive rate. So there are solutions that are out there, not to mention your Ally, your Marcus, your Capital One. There are great solutions out there. The question as an independent RIA, or as an advisor generally, is what solution works for my business and my clients? If you are, again, you're part of a BD, I'd be asking the question of the BD. How do we help clients with this need? And I know we earn a lot of money on default cash sweep in the portfolio. Maybe that's all of our revenue. My clients have real balances sitting away. How am I helping them today? Do we have the right solution? If you're an independent RIA asking, clients are gonna see Marcus, they're gonna see Ally, they're gonna see Betterment, they're gonna see Robinhood. Is that a solution I want to promote and that works for my business? Or can I find something else that works deeply with my planning software or my portfolio reporting software or whatever it might be? So again, competitive set is somewhere between one company and infinite thousands of banks. And I think just grounding, how do I want to incorporate this into my practice? How do I make this a part of planning? How do I make this part of the conversations I'm having every day? And then making sure that solution works for you and deeply works for you, whatever your business may be.
Go ahead, Brett.
Yeah, I was just going to add a couple, things on the cash side that I think make this environment more unique than kind of some other ones, and I see some younger advisors out in the audience as well. So there's so many clients I have now that are kind of in the millennial stage where they're looking at houses, and in a normal environment, this wouldn't be the case, but I can think of at least 10 that have been looking for a house for a year and a half, 2 years, depending on where they live. It's too expensive, or this hasn't worked out, or they bid on 3 of them and got outbid, and that money just sits there, right? So a lot of people have given me Flourish balances where we set it up, and this is just there till I buy a house, and 2 years later, it's still there, right? So there's conversations like that I think are unique to this environment where you can actually still tell them, hey, it's not all a lost cause. Look, kind of all this money you've made along the way, we'll figure out the house thing, but it kind of helps ease the pain of some of those situations where it hasn't worked. And then the other big one is taxes.
Oh, I'm glad you mentioned that. I was thinking that.
Yeah, and just the quick one on that is I have a lot of people doing really well that are doing better this year than last year. So people normally pay estimates, as an example. If you've made a lot of money in 2023, you don't owe that money till April 2024. You can make a ton of money just waiting to pay the taxes. So there's a lot of people I've talked to where it's like, oh, great news, I got a huge bonus, I'm gonna pay the estimate. And it's like, no, don't do that, right? It's like, it's not official. I don't put an email, don't pay your taxes, but it's just wait, right? So there's no reason, pay what you need to, get penalty proof, and all this extra money can earn 5% until April, or in some cases if you delay till October. So there's a lot of actual ways that you have like real reason to set this cash aside, but that you can earn, some nice cash, whether it's Flourish or anywhere, right? So I should say, like, just behaviorally, like to Ben's point, like if we just want to tell them, do something, make sure that you're having the conversation, we kind of keep having it, and enough people are probably sick of me saying it at this point, but.
And I think I'm glad you mentioned the tax piece, because that's something definitely we do for our clients who own businesses or have distributions that they then are going to owe taxes on, whether that's quarterly or later on in the next year. But also we're kind of out of this environment now, so maybe this is a moot point. But student loans have had that moratorium for however long, and so they did not have to pay, and there was zero interest for all these students. Or I even have some Gen X clients who still have $10,000 they were hoping would be forgiven. Next topic, but having that money invested for the last 3 years in a Flourish-like account where they're earning now 5%, maybe at the time it was 3%. They were making money more than the interest that was being charged, which was zero. Now, with interest starting to kick back up, obviously that's just a conversation you're going to have with your clients. You're really playing that arbitrage of, would you rather pay off your debt, whether that's student loans or a mortgage, which hopefully they refinanced and have like a 2.7% mortgage, and they're going to die in that house and never pay it. But
sounds like personal experience there.
Yeah, she's not talking about herself in that situation.
I did mention that last night. I will die in my house. But so yeah, would you rather pay back where you're basically making the difference between what you're earning in Flourish and what you're paying back on debts that you're already going to have, whether that's student or housing or whatever?
Yeah, and that's another behavioral thing. Like, we kind of keep getting back to that. Is I have a lot of older clients who really, really want to pay off their 3% mortgage. And it's, you just argue with them and say, just don't do that. Just please don't do that. And it just can't help it. It's why, no, my house will be paid off. And it's just stuck in their head. But if you can convince them at all to just take that money and earn 5 while they pay 3, it's just kind of one of the best things you can do.
Free 2%.
It's just basically just giving them money. So like I said, whether it's Flourish or other places, just convincing them that this is a different environment than they've been used to for a long, long time. That's kind of worth the discussion.
And sometimes with that conversation, if I know that client personally is going to have pushback and is really going to be hesitant and they really just want to pay that mortgage back, you don't have to do an all or nothing. You can split the difference. If they got a bonus that's $50,000, maybe they put 25 towards their cash position that's going to earn 5%, and another 25 chunk down on their debt. That might just make them feel better, because as we know, paying down debt feels, whatever system you use, snowball effect or whatever, it feels behaviorally better. So you can split the difference.
You alluded to this earlier, Brett, but obviously with the regional bank crisis, a lot of people had new concerns about the safety of their money. If you want to talk a little bit about how you dealt with that, Ben, and then you guys as well, I'm sure that was a shock to the system, and you had to act quickly to reassure people, I'm sure.
Yeah, absolutely. I'd start by saying a lot of terms we throw around, FDIC, SIPC, a little bit of industry jargon, and sometimes advisors don't sit and think, what does it really mean for a deposit to be FDIC insured? Why does that matter? The way the Flourish program works is we spread deposits across a number of underlying program banks in order to provide significantly more FDIC insurance coverage than a single bank, also to give us flexibility and resiliency, because as we saw back in March, none of us know what's going to happen, particularly in the banking world. We speak with a lot of firsthand experience here. We had a bank fail. Signature Bank was one of the banks in our program. Found out, like everyone else, 5 p.m. on Sunday that they were going under right after Silicon Valley Bank, which made quite a lot more headlines. And certainly that wasn't the most fun night of my life. And what I can say now is system works. We passed the stress test. It worked flawlessly. Not one of our clients lost access to their funds for 1 second of one day. What we were able to do is take every dollar we had at Signature and automatically move it to other banks in our program. And even for us, that was an incredible reminder of why systems like this are important, why it is important to think about the safety and security of cash. Every dollar we had at Signature was FDIC insured, so we slept pretty well that night. But certainly if you're somebody at Silicon Valley Bank or First Republic Bank, you might have been a little bit more uneasy until realizing, no, the US government really has a true vested interest in making sure that the system remains sound. And so from our perspective, that was an amazing proof point. Again, pass the stress test. This is why these types of programs are important. From our perspective, it was a reminder that we need to double down on strengthening our bank network. We were 8 banks back in March. We have 16 banks today. So we're feeling really good about our ability to not only offer increased FDIC insurance, now $2.5 million for an individual account or $5 million for a joint, but also to have that flexibility to allocate funds across our underlying bank. So from our perspective, we feel really phenomenal that the system works as intended, and in fact, we can make it stronger. I think for advisors, there's an even, and really for clients, another takeaway, which is cash, not every dollar might be as safe as you thought. And so from a lot of client perspectives, I think they're thinking about this trade. I can either go put that money at one of the big four, Chase, Citi, Wells, B of A, and it is safe. Your money, if it's at Chase, is safe because the Chase will go down at the same time the U.S. government goes down. You're in good shape. But the trade there is you get safety at the expense of 0 in interest, or rounds down to 0 in interest. Or I can go try to earn higher rates, whether that's an online bank or a regional bank, and have that always that little niggling fear of is my money as safe as it could be? My absolute safest reserve, is that where it should be? It's so important they're calling in the ambulances to make sure your clients are safe here in this emotional topic. And so again, from our perspective, we feel like we're balancing the best of both worlds, both a really competitive rate and being the ability to diversify and spread that across 16 different banks, keep adding banks, probably 20, 30 by the next 6 to 12 months. So we feel great about our position. And if you don't use Flourish, it is, do I want to put it all at one of the big four? No, my assets are safe, but really am I going to earn anything? Or do I want to do the little bit of due diligence to make sure that whatever online bank or regional bank I'm using, make sure that money is safe when I need it, because that's ultimately what's important when it comes to cash.
And for our clients, I love what you said, and to build off of that a little bit more about how you worked through what happened earlier this year. A lot of our clients do have both, money market funds with our custody with Schwab, or with cash with Flourish. But the money market funds, they asked questions about what was happening in March, and we had to discuss with them that it's a different entity through Schwab. It's their banking side, not your portfolio side. That was a conversation, and that's fine. That's our job. Flourish went above and beyond, and again, I feel like I'm the biggest commercial for you all. Sorry. But they went above and beyond the transparency that they sent emails directly to the client. They sent emails directly to the advisors. So we were clear on what was happening, how and when. We knew about the Signature Bank situation as soon as you did, basically. And so we didn't have to have as much of a conversation with our clients who had large cash balances at Flourish, because they were already aware of the safety of their cash, whereas those same clients were maybe asking about their money market funds and the risk to Schwab, especially during those days when Schwab's stock was a little rough for a time.
Yeah, and then just to piggyback on the infomercial, like Lindsay said, one of the biggest things...
Hashtag not an ad.
Yeah, one of the biggest things in our world, as someone who calls for 401k rollovers all the time, you budget in your calendar, an hour and a half to talk to Transamerica or Northwestern Mutual or whatever. You don't have to, you just scream representative after about 10 minutes over and over again. And it's just the worst experience ever, right? So in this case, one of the best things is that there's someone there to pick up the phone, right? So people have problems, they can call them direct. I've heard a lot of good feedback. Hey, listen, I called them, we had a problem. My client recently, who unclear, is still trying to figure out whether he was hacked or some sort of cybersecurity thing. He was worried. People got into stuff. He can call right away and say, listen, do these security things on my account. It's much easier to talk to a person. It's also nice when they call me first and say, no, listen, we'll do it together, and I can call, and the whole thing is very quick. It's not like a difficult conversation to try to figure out. So in this day and age, when you actually get someone on the phone when you're trying to solve a problem, it's a pretty exciting thing.
Right. Well, I think we have a few more minutes until questions. Is there anything you guys want to leave people with before we get to the questions here? Any wrap up?
One thing we didn't talk about was using Flourish with non-clients or prospects, and you had a couple of great lines on that. I'd love to put you on the spot.
Yeah. You can check off when you invite a client, allow them to refer. And so then what's really fun is when they send it to their brother-in-law that they had conversation over dinner about who's getting the better interest rate. You get an email that says, client John Smith referred you to their brother, Stephen Smith. And it opens up the conversation where I can say, hey, I saw you referred with Flourish. Can I have a conversation with your brother-in-law? Oh, he has a huge liquidity event coming up. Oh, he's having a huge payout. He's selling his business. He's looking for somewhere to park cash. Who's his advisor? Is he having a good time talking to his advisor? Oh, he doesn't like them. Oh, that's a shame. I would love to be a second opinion. And so that it opens up these other conversations for prospecting that makes it so much more organic. You don't have to sell or push. It just happens.
Yeah, and to piggyback on that, the referral feature is great. There's also one where the person can click whether they want me to see it or not, right? So in that specific case, there are probably, I don't know how many, probably 5 or 6 people out there who I have referred in the process. They have money at Flourish. I don't see it. They're not my client like day to day, but they've been referred to someone else. But that usually just comes back to you at some point, right? Like you've done something nice. They know that it was me that kind of did it initially. And at some point later, I don't know when, you're not following up with those people, but at some point later, there's a good chance that's going to come back in a good way, right? You kind of help someone out. It usually works out that way. And then the other piece of that is, when it comes to the referral side, like Lindsay was saying, that's like a really good opportunity to talk to that person. The other part is your client feels really special that they have access to this somewhat exclusive product, right? So if you're on Ally or Marcus, any of these places, you go on, it doesn't matter who you are, you get an account right away. If you go to Flourish right now and you're doing it on your phone, you can't get in, right? You have to be invited by me or be invited by Lindsay or be invited by an advisor. People like that, especially not to stereotype, but very wealthy people like that they're in some sort of exclusive thing that they couldn't get without talking to you, right? So it's just kind of one little feature that I think is a little bit unique about it, and it's like you're inviting to this exclusive club that they can only get to by talking to you.
And happy, wealthy people love to compare how much money they've made, especially in something secure like cash. They love that conversation.
All right, well, we have a very exclusive question coming up. Yeah, please run through fees, money movement limits, and mechanics, ACH, wire transfer, Zelle, etc., ability to bucket like Ally, auto transfers, etc.
One of you two want to?
Yeah, well, I do actually just want to jump in and actually talk about you mentioned, Brett, that we don't charge fees on it. You don't charge fees on it. So it's pretty transparent to my client that I'm not getting paid extra. So their first question is, well, then how is Flourish getting paid? And I talk about, you can discuss that. But what's nice is I can say, unless you want a same-day wire, that's where you're going to see a fee, an explicit fee. But otherwise, there's not going to be these big charges that you see where you're going to see my quarterly fee come out of your portfolio. It's just very clear and concise, transparent. I feel like it's easy.
Yeah, so I'd start. We're a cash sweep program under the hood. Client gives us money, we turn around and deposit it to FDIC member banks that we have relationships with, Citi, PNC, HSBC, again, the 16 I mentioned. Like all cash sweep programs, we make money on the spread above what we pay to clients. So banks pay us a higher rate than we pay on to clients. That spread is our fee for running the program. I would make the point at Schwab, they historically keep about 90% of the spread for themselves. If you're a Schwab client, it is about 60% of their revenue as an entire business is that excess interest that they are getting from their banks, which are also banks that they own. For us, the economics are exactly flipped on the head. We tend to pass along about 90% of the interest to our clients. So hopefully pretty good deal for people that are out there. As a result of that structure, we have no account fees. We have no sign-up fees to clients or to advisors. It is absolutely free. The only fee is for a 15-day fee if you want to place a same-day wire withdrawal, which is a tiny percentage of our withdrawals. In terms of money movement, we've worked very hard to make it very easy to get money in and out of these accounts. That's ACH in and out. That is wire in and out. That is really easy to set up standing instructions with your custodian, the standard Schwab MoneyLink or Fidelity Move Money paperwork. Clients can link as many of their underlying bank accounts as they'd like to Flourish, either through Plaid, type in their username and password, or by typing in their account number and routing number, just like you traditionally link a bank account. So a lot of flexibility in and out, ACH or wire. Other questions here. Ability to bucket like Ally, don't have that today, something we're exploring pretty seriously, call it in the next 6 months. I think that will be important to some of our clients. I would broadly make the point, because we are advisor-centric, because we are RIA only, our entire roadmap is shaped by the feedback that we receive from advisors and your clients. And that is really foundational to us. That is down to the level of how we staff our customer service team. It needs to be very phone first, New York City based, because we know the types of questions we get, the types of folks that we are working with, and have to be able to meet that need accordingly. And so when it comes to a new feature request, you'll always see us balancing providing retail-like features, and bucketing can be definitely a planning-oriented feature that we think is really important and we'll get to. But you're also going to see us rolling out new technology integrations into CRMs that you use or other advisor-centric tools, and always making that type of balance of making sure we are prioritizing advisors very heavily, making sure it is useful for you all as possible.
We haven't implemented the integration yet, but I know your integration with Black Diamond is now up and running. So we're supposed to be starting that process now, soon, I think, with our CIO. Yeah.
Love to discuss. Yeah, integrations with Envestnet, Tamarack Product, Orion, Black Diamond, eMoney, and Redtail, and more integrations, probably another 2 by the end of this year. The final question as part of that was something about auto transfers. So not to get too into the weeds, most transfers are manual. Client says, I want to move 20 grand from A to B. Money moves the next day. We also have 2 automatic features. One is your more standard variety recurring transfers. Move $1,000 every week on Friday or whatever that might be in either direction. The other option there is something we call Smart Balance, which allows clients to set a target on their linked checking account. So let's say I want to keep 25 grand in my Chase account on a regular basis because my advisor told me, hey, that's a good amount for you to pay your bills and live your life. Could set a $25,000 target, and then Flourish will periodically look into your bank account, and if you've got more than 25, sweep it over to Flourish so you can earn a higher rate, make sure your money's working hard for you, or sweep money back into Chase if you fall below that target. Totally optional feature, but for the clients who set it up, tend to absolutely love it. It's just a nice, I know I have enough to pay my bills and live my life. I also know that I don't have to lift a finger, and my money's going to work harder for me.
For those of you that are Starbucks app users, I mean, I keep a $25 balance in there, and if it drops below a certain, I don't know if it's like 20 or something, it automatically pulls from so I never am at Starbucks, and I have to panic because I only have $3.50 in my Starbucks app, and I'm getting my latte, and I gotta panic and refill. So it's a great feature.
If any of you work at Starbucks, we'd love to pursue a partnership of a Starbucks Smart Balance Flourish combo. I think it could really make millions.
Yeah, and then that's just general advice across my practice that I try to spread throughout my firm. The more things you can automate for people, the better. So one of the first things I try to do when I get a new client, especially someone who's younger, is to get them to set up an ACH and get them to agree to give me any amount of money monthly or any amount of money every 2 weeks. And at the beginning, people in my firm are like, that's stupid. It's $1,000. It's $500. Who cares? And then you just do that for a couple of years, and all of a sudden, those $1,000 a month are now $5,000 a month, $10,000 a month. Once these people start to really kind of kick it into gear and earn real money, you already have that link there. So just get them automated, get them where they don't have to make decisions, and then it just goes. Like they just get their money from their paycheck, they give me money, and it just happens. It's the same thing. It's why robo-advisors are successful. You can set up your own robo-advisor within your practice, right? The reason, Wealth Founder Better, they're great is because people just say they're going to put in money and they close their eyes, and at the end of the year it works out. They can do that with you too at pretty much any custodian that you work with.
Great. Well, thank you so much to our panel. Everyone clap it up for the people on stage here. They did a great job. Thank you for coming out so early. I'm going to go get some more coffee.